Following the Bretton Woods Agreement of 1944, the United States agreed to exchange its dollars for gold at a fixed rate of $35 an ounce. Other nations pegged their currencies to the US dollar because of its stable convertibility to gold. Central banks of foreign countries also held dollars as reserves, and so the United States dollar officially became the world's reserve currency. However, President Nixon broke the Bretton Woods Agreement in 1971 and removed the dollar from the gold standard. The dollar is still used as the world's reserve currency, even though it is no longer backed by gold. An advantage to the United States of having the dollar being the world's reserve currency means that most commodities, such as oil and gold, are priced and traded in US dollars. Dr. Barry Eichengreen of the University of California, Berkeley, explained the role of a reserve currency in an opinion piece published in the Wall Street Journal in March of 2011. He observed, "When a South Korean wine wholesaler wants to import Chilean Cabernet, the Korean importer buys US dollars, not pesos, with which to pay the Chilean exporter. Indeed, the dollar is virtually the exclusive vehicle for foreign exchange transactions between Chile and Korea, despite the fact that less than 20% of the merchandise trade of both countries is with the US. Chile and Korea are hardly an anomaly. Fully 85% of foreign exchange transactions worldwide are trades of other currencies for dollars. But, according to some experts, there is a possibility that the US dollar will be unseated as the world's reserve currency because of its declining value. There is already a trend showing that governments are diversifying their foreign exchange component of total reserves from dollars to other currencies. Countries with developing economies hold a larger percentage of reserves equal to their GDP than developed countries do. For instance, in 2008, developing economies held reserves equivalent to 21.9% of GDP, whereas the percentage for advanced economies was much closer to 5.5%. A J.P. Morgan report from 2009 states that some reserve diversification has already occurred. Since 1999, the US dollar's share of global reserves excluding gold has fallen steadily from about 72% to 63%, according to the IMF. Central bank holdings of euros and British pounds have risen accordingly. What hasn't steadily fallen is the quantity of US dollars. In an attempt to combat inflation, the Federal Reserve has adopted the policy of quantitative easing, which is essentially a major purchase of an assortment of securities. This move has not yet overly increased inflation. However, countries whose central banks hold US dollars are frightened that inflation will continue to devalue their reserves. Brazil, Russia, India, China, and South Africa, a group of countries more commonly known as BRICS, are some of the most important nations with emerging economies. BRICS was formed in 2009 and has become one of the most formidable economic forces in the international community. It comprises half of the world's population, as well as a fifth of the world's GDP. Recently, leaders from these countries convened in India to discuss alternative reserve currencies in order to circumvent US dollars in the global economy. Economic commentator Gonzalo Lira explained during an interview on Russia Today about the focus of the summit.
The key issue of the summit is that they're going to be signing agreements to trade among themselves in their own currency and have swap agreements, that is, currency exchange agreements between their central banks in order to swap the excess currencies they accumulate of each other's denomination. For instance, between Russia and Brazil, say, they'll as they accumulate currency in either one of those two countries, their central banks will swap those currencies in order to maintain the balance of trade, which is the typical function of the central bank. Now, this is important because it creates a self-sustaining cycle among these five countries. Now, South Africa is really the small one. The ones that really matter, of course, are Brazil, Russia, India, and China. Those countries, if they start doing this independent bloc, will present an economic challenge to the West, that is, to the Eurozone, and to the North American Free Trade Agreement.
What will this step towards more trading autonomy mean for the dollar? First of all, trade between BRICS countries will operate more smoothly. But more importantly is how this will affect the United States. If the dollar's downward trend of being the world's currency continues, This will make it much more difficult for the United States to operate on such an enormous structural deficit. That is, the demand for Treasury securities will diminish when countries no longer have such a strong need to peg their currencies to the US dollar. What this means is that currently, other nations value their currency by ensuring its exchange rate is close to the value of the dollar. When nations find that the value of the dollar has fallen below a certain range, they buy up U.S. Treasury securities in order to boost the value of the dollar. In the same way, Treasury securities are sold if the value of the dollar rises higher than what they want their nation's currency to be worth. Nations like China, with its renminbi, purposefully devalue their currency in order to export their products more easily to the United States. BRICS countries will begin to increase loans in local currencies in order to promote trading amongst themselves while simultaneously avoiding the inflationary side effects of the US dollar. By sidestepping the dollar in intra-BRICS trading, this will act as a catalyst in the erosion of the status of the dollar being the world's reserve currency. For the time being, certain commodities, like oil, will continue to be traded in US dollars, which will maintain some of its demand in international markets. However, the United States will still have to fund its debt-driven economy, despite a reduction in demand for Treasury securities. The United States will most likely turn to the Federal Reserve's printing presses in order to fund itself. This will accelerate the rate of inflation of the dollar, which, in turn, will devalue the reserves of countries that still hold dollars. Emerging economies have already started to take after developed economies by investing more of its reserves in gold. The International Business Times reports that many countries are already hedging their foreign exchange reserves against the uncertainties facing the dollar and the euro. According to the latest data from the World Gold Council, central banks purchased a net total of 440 tons of gold in 2011, compared to just 77 tons in the prior year. That was the largest amount of net purchases of gold by central banks since 1964. Russia was a large buyer of gold, adding around 95 tons in 2011. China is believed to have bought 500 tons in gold last year. In 2009, the People's Bank of China confirmed that it had nearly doubled its gold reserves since 2004, after secretly purchasing significant amounts of the precious yellow metal. With the continual decline of the US dollar, countries holding a large amount of them as reserves are looking for ways to jump ship. It's unclear how long the dollar will continue to be the world's reserve currency. Some experts say 10 to 20 years. Economists speculate several possible reserve currency alternatives to the dollar. However, data shows that gold seems to be the fallback commodity due to its liquidity and its preservation of value. Whatever happens, the United States will have to get its economic house in order if it is to continue to play a major role in the international economy. If not, inflation will continue to confiscate what little savings Americans have as it continues to devalue the dollar. Scholars often ridicule those who advocate returning to the gold standard. However, with other nations moving towards this direction as the decline of the dollar draws near, this idea doesn't seem quite so foolish now.